Hello, this is Ken Tomko with T2 Asset Management doing our monthly review of what's going on in the markets. As always, please don't use these for trading purposes. They're for information only. We start with a weekly chart here of the S&P 500, and you can see this going back to 2020 here on the right side. Just still getting a little bit of it's the chart showing the COVID sell-off there, but and after that big rally through 2021, bear market through 22 as the Fed increased interest rates. And then it's been off to the races ever since. And here we are, early 2025, and you can see the drawn the trend channel here. Nice uptrend that's been going here since basically late 2023, just up and away, and not really anything to worry about just yet. We would look down here in a little more detail at our daily chart. You can see here this will get us through basically coming back to early 2023. It's given us about 2 years, and again, just been running a nice uptrend. Certainly had our sell-offs here and there, but for the most part, it's just been up and away, and nothing really to be concerned about. We do, I did put support on here, and you can see in the last 6 months, we've really just kind of gone in a sideways pattern here. So it's not a full bull market, but sometimes that's what markets do. They just go sideways for a bit before they move on. If we go here and look in a little more detail at the 2-hour chart, this gives us about 6 months of trading on the S&P 500. You can see a little bit more of the back and forth action as we've had some rough weeks here and there. Certainly, this even the start to February, and but when you move back to the big picture, you can see that we're still in a nice uptrend, and we are, even though, as I pointed out here, this shows us in more detail. Really, we haven't gone anywhere since November. It's just been a sideways market. If we look at some of the breadth indicators, the what's going on underneath the market, we have here, this is the bullish percent. It's the percentage of the S&P 500 that's in an uptrend. And right now it's at 55%, so not high participation that we're having some rally and a bunch of stocks are holding us up. It's more half the market's in an uptrend, half of it isn't. So we get a little sideways action, and that's really kind of what we're seeing here as it's going sideways there for 6 months. Next one down is the advanced decline line on the New York Stock Exchange. And again, sure, January had a nice punch up, but since then really just been sideways on that. And then finally, the bottom, this is the VIX, the volatility index. We would see this rising in a big sell-off as we did here in December. You look at that chart when you have that sell-off, and you see the VIX really spike. That happened. We've had a couple of smaller ones, but really nothing to be concerned about yet, and hasn't been elevated. So really a lot of just kind of sideways action is what we're seeing here in the markets. We come over here to interest rates. This is the interest rate for the 10-year U.S. Treasury bond. And again, going back to 22 here, since this is where the Federal Reserve was raising interest rates to fight off inflation. And then really for about 3 years, we've just had a sideways motion between about 5% and 3.5%. And that's still what we're continuing to see. So any big move in interest rates, and that's generally going to trigger markets one way or the other, but we've just really had a sideways movement. So if we go then to some of our economic indicators here from Trading Economics, we go over GDP growth rate. Last one is 2.3, so it's fine. Nothing to be excited about, but positive. Obviously, non-farm payrolls, so jobs number. Again, that's a decent number. Both of these are decent adds to the jobs numbers. Nothing again to be really excited about, but nothing terrible either. Inflation's holding around 3%. So that's if that were to go much higher, we might see interest rates come up to kind of fight that, thinking that the Fed might have to raise rates at some point. But so we're not seeing that. That's pretty steady. And then we come down here. I like to look at retail sales. That's not a great number. That was negative last month. But overall, these aren't terrible just yet. But that retail sales number is a little bit of a concern. As far as earnings on the S&P 500, this is the forward estimate for analysts' earnings going out to We're out here to Q4 of next year of 26, and basically analysts are thinking that S&P is going to keep earning money pretty well. So not a big concern from that standpoint in terms of what they're thinking we have going forward. So that's a good sign. And the reason that's a good sign is I've pointed this out before that this is our valuation metric on the S&P 500 to see, where it is valued relative to the earnings. And at 20 times earnings, the S&P 500 would be at 4,000. And right now it's at 6,100. So we're definitely in an overvalued market. Now, one of the ways that can get, there's a couple of ways that can get fixed is that at some point the market pulls back down to where its value should be. But the other thing that could happen too is that earnings go up higher, and then you're not in an overvalued situation. But it is, however you want to look at it, an overvalued market, and so there is a little bit of caution, and we can see that. Look, as we pointed out on the first chart here, that it's been up for a couple of years, and it's not like the economy has been gangbusters for the last couple of years. So it's maybe getting a little bit out ahead of itself. But for the time being, again, we just look at what the markets are telling us in the charts, and we are in a nice uptrend on any measure you want to look at it right now, and not seeing anything glaring from the economic side that would have us worried. The overvaluation part, sure, that's concerning, but it can take a long time for that to get fixed. That could stay in that situation for years before it gets fixed. So for the time being, we're just going to stay invested with everything and up and away. I'm going to put up our contact here. Hopefully this was helpful and informative. And if you'd like to hear about what we're doing for clients in our portfolios, please don't hesitate to reach out. Otherwise, we'll see you at the next update. Thank you so much.